Cash basis versus accrual basis accounting. Okay, so the key thing to remember is that cash basis is like an informal way of doing things. It's not in accordance with GAAP, right? We have our accounting standards. We have uh, this set of rules and principles that a company has to adhere to be speaking the language of US GAAP. If your company chooses to use cash basis accounting, that's not a GAAP kind of compliant way of accounting. Okay, what we're doing in this class and what we're going to continue to do is accrual basis accounting. Okay, so what is the difference? In cash basis accounting, every journal entry will have cash involved. Okay, there's like we had what happens if your business goes to perform some service and you give them an invoice and they're going to pay you later. Did that journal entry, what is that journal entry, first of all? What are we earning? Accounts receivable and service revenue, right? You would credit service revenue, debit accounts receivable. There's no cash involved with that. You agree? Okay, but that, obviously is a journal entry. That is part of our accrual basis system because the triggering event, as we see here, was the performance of the service, right? It wasn't the exchange of cash. Now, cash basis, the triggering event is when cash is exchanged, either for revenues or expenses. So every journal entry is going to have cash involved, right? There's no journal entry that won't involve cash in the cash-based system. Okay, so it's simpler, right? Every journal entry, you just have to see when you have a cash inflow, you're going to have something happen, and when you have a cash outflow, something happens. Okay, everything else, you don't have to really worry about these different scenarios where there's something that happens but cash is not exchanged. Okay, so it's very simple, but it's not accurate, right? So we saw, for example, if we pay for an entire year of insurance, right? If we pay in January, in the cash system, we're going to have all of that expense be for the month of January, even though it's benefiting us for the whole year. Okay, so we would expense that full year of insurance expense in kind of the wrong month. It's not going to be matched up correctly. Okay, um, or when let's say you did a service for someone in January and they paid you in March. In the cash system, you're going to show that sales happened in March because that's when the cash kind of happened. And your January, when you actually did the work, it's not going to show that revenue. Okay, so it's not gonna match up the timing of things correctly. Okay, but it's more simple because you just look at when cash is going in, when cash is going out. Okay, everyone understand? Yes. Okay, so let's do a little test here. Okay, so this is a situation where your company is having certain things happen to it. Okay, so you can see that it's earned revenue. Some of that revenue you haven't received yet. Okay, you've just done the work, but you haven't received the cash. And the same thing with expenses. You've incurred certain expenses, but you haven't paid for some of it, right? Some of it is just like you have the invoice and you haven't yet paid for it. Okay, so your job is to read through this and think about uh, under in this first part, under a cash basis system, what is the revenue and what is the expense? And then just do the same for accrual basis, okay? And see if you can untangle what's going on here between these two systems. So why don't you take a couple of minutes? I'm going to turn on the lights. You can talk to your neighbor. You can write with a pen and paper and try to figure it out. Okay, anyone want to try to give their answer for a cash basis? Just with the cash, yeah. So what is the revenue and what are the expenses under the cash basis? Okay, so let's start with the revenue. What is the revenue for under the cash basis system? Does anyone? Yeah, what do you think? 130,000. Uh, of that 130,000 service revenue you earned, have you collected cash for all of it? So then how would you have recognized that all 130,000? Because remember, you're only going to recognize the revenue when you actually receive the cash. So you want to revise your answer? 105,000, exactly. Okay, so for number one, the revenue is going to be 105,000. Yeah, you were. Okay, expense. What about the expenses? Using the same. Okay, so I don't want anyone to think through it. I want someone with an answer. Who has an answer? Yeah, do you have 75,000? Okay, so how'd you get that? Okay, I'm partially with you, but what about this 5,000 here? Should we include that as an expense or not? Who thinks yes? Who wants to advocate for yes? I agree. Yes, you do count it. Okay, so even though it's for a future expense, under the cash basis, the cash went out the door. So we're going to expense it right at that moment. Okay, so yes, I think you're partially right in that you had actual 85,000, but you only paid 75,000 in cash. So I agree that 75,000 is included, but we have to also add this 5,000. Okay, so the total is 80. Okay, so that means that we would have shown a net income of 25,000 using the cash basis. Okay, now what about number two? For accrual basis, what's the revenue? Yeah, 130,000. This one does not need to be overthunk. Okay, 130,000. Because some of it, yes, we would have had credit service revenue, debit cash, and some of it we would have done debit service revenue, credit service revenue, debit accounts receivable, right? But the total revenue would have been 130,000. That's how much we actually earned. Okay, it would have been split between cash and accounts receivable. Okay, what about the expenses? Okay, who said that? Okay, 85,000. Any other votes? Should we include this 5,000 prepaid insurance? No, right? Under our accrual basis system, we're going to have that as an asset, and then later it will be expense when those expenses are actually incurred, right? And that's kind of what the chapter is going to be about, where we have the prepaid asset, and then at the end of each period, like let's say we prepaid rent for a year, right? At the end of each month, we'll have to kind of draw down that asset and expense the rent, right? So that's what this chapter is going to be about, okay? But for now, yes, prepaid, uh, this prepaid expense is an asset. We're not going to expense it under accrual. So yes, all we have is this 85,000 of actually incurred expenses. So we'll put 85,000 here. So now what is my net income? 15 plus 30 is 45,000, right? Okay, so you can see the exact same events happen to the business, but depending on which system of accounting we use, we're going to have two different numbers for our profit. Okay, so again, this is why the rules matter. Okay, if you're buying this business, right, it's going to look different. You're going to care about how profitable the business is, right? And so you have to understand what's going into the numbers. If a small business owner is reporting on a cash basis, you have to kind of normalize for that, okay, versus doing an accrual basis. You'll have to understand what basis the financial statements are presented in. Okay, so now you see it actually does make a difference. So, these types of details do matter.